What's going on, traders? Hope everybody's having a great holiday season so far. Happy holidays to all. And if you're in the financial space at all on social media, and even CNN today was reporting on it, the metals have been going absolutely crazy. Gold and silver are on historic runs. New highs are being met every single day. And so I wanted to do a video here on gold and silver. If you are not already long, I just wanted to point out in a quick video some areas of interest for me that I would potentially be looking at to add into a position, or even taking a new position on either gold or silver. Now, they are very extended, and I wanted to make the caveat. Now, as I mentioned, we're already seeing CNN now report on the silver rally, right? So, whenever I start to see mainstream media or just an overabundance of people on Twitter posting about gold and silver, I get very, very cautious. So I do think that there is the opportunity, potential to see a big dip in both of the precious metals, and patience here is what will save you. You do not want to be the last person at the party dancing when the music turns off. So let's take a look at gold, a little bit trickier here. GLD, the gold ETF, and I have been bullish on gold really since last summer. I started really tweeting about it, I believe, and you can see down here in the chart some of the levels that I had already drawn out from last year down in the 230s and 250s. But we've seen a beautiful continuation run here over the last few months. This nice compression ascending triangle here and breaking us up to new highs as we get the displacement move higher here. And then of course we did get a nice dip for a nice opportunity for buyers to potentially come in down here in the 360s. So if you already missed that opportunity, what could potentially be the next? Well, gold is a little bit trickier than silver here, as it has a little less defined areas where I would be totally comfortable in being a purchaser of this asset. I will say, however, that what you can also do is look to take long positions in tranches, say 30% at one area, 50% at the next area, and your remaining 10-15% if it does dip lower. That would be really one of the safer ways to play it. And hey, if you get only 35-40% in the trade and it starts to go in your favor, in your direction, well, okay, at least you have some skin in the game. But of course, reminder that this video is not in any way financial advice. It's just my opinions and just what I am personally looking at on these particular metals, gold and silver. So we had the pull in after the displacement up higher. Now we've just made a new all-time high, right? So we're certainly going to be paying attention to that 400 psychological level and that last all-time high at that 403 half. We'll just call it right there. Okay, and that was the high from back in October, the end of October, October 20th to be more succinct. Now, would I be a buyer up here? Well, just as I said, we're seeing everybody and their mother now posting about gold and silver, gold and silver. At this point, it's going to start to get to a point in the market cycle where there's not that many people left to buy, and people that are looking for value or discounted prices will not be entering this trade, and nor would I at this level, right? We are certainly trading at a premium, quote unquote, right now. But where would I be interested? Well, I certainly would be interested as a last line of defense, right? Of course, $360 on the gold ETF, right? And you also have around this 370. So we have a little zone here where I potentially would be interested in adding into a position or starting a new position. This would probably be the best one at 370, taking say 40%, taking another 30% at 365, and then a little bit more in the 360s, and then just waiting to see if we happen to find some acceptance underneath that 360, right? Well, that would be an issue, right? If we started seeing some daily candles close like this, okay, that would be an invalidation of the trade idea, in my opinion. So we started seeing some daily closes like this. I would not be as interested anymore in the trade overall. That being said, we have to watch out for manipulation, certainly on the metals overall and just all markets. So there is a chance we could see 1 or 2 days closing underneath that 360, and then we go ahead and pop up right above once again. And if you get stopped out, you can always re-enter, of course. And Tesla actually, which recently hit, I think it was yearly highs, did the same thing a couple of weeks ago, where I was tracking that to get up into the 480s, and it did a little fake out, recaptured, and then went ahead and made a new high for the year. So just be aware of that as well. Of course, if we start seeing candles close underneath, or we see a candle close underneath and it is a large impulse move down like so, okay, you know you're wrong, get out, run away, and maybe watch for a possible retest of the highs of this breakout area and see if markets want to come down into really this area and trade lower. Oops, excuse me there. Trade lower and then higher like so. But that's neither here nor there. Let's focus on the current times. Okay, so 370, 360, definitely an area I am interested in the gold ETF. And the only other place that I'm really interested, and another thing I want to point out here, the space between the highest high and where we are on the daily 9 and 20, a lot of space here, and you're going to see that really exaggerated on silver, as it has a lot wider ATR. Not really super overbought here on the gold ETF, but certainly getting a little bit spicy. So another warning for some caution on entering new long positions here on gold. But with all that said, where would I potentially be interested in buying now? Well, it would be down into this last area of basically equal highs, right? So I'm going to make an area right here. Still, even this, and with the relative strength overall, I want to be maybe a little bit more aggressive potentially with my entries. So maybe a little bit higher up into this 390 area. But really, as long as we hold the equal lows again, right down here, 383, I'm going to call it. So as long as we hold that area, that would be another zone that I would potentially be interested in adding into a long position if I was not already long, or working into a long position, a new long position right in this area, anywhere from 390 to 383. And okay, well, we all know the risks in trading. Of course, if we see a break below, well, then I would be risk management first, exiting the position, and potentially looking at a new re-entry down in the aforementioned zone before, 370 to 360. So if we see that break underneath, can give it a little bit of room. 383, 380, anything below that, watch out. I'd be looking for lower prices, and then maybe we can look at re-entering in the 370s, 360s, as I already mentioned. 9 and 20 here, you have the 20 just kind of coming into around that. It's sitting at 393, so it's right about in that 390 area for the structural confluence overall. So I don't mind that. Definitely a little extended. The market technically in the bulls right now, in the metals right now, so strong that we might only get a retest of that 400, 405. This would be the most risky entry, getting in right around 403, maybe with a $3 risk under 400. I don't love it, but it is something that I have to mention. Watch out too. Now we've had a new higher high. Really wouldn't surprise me to see some sideways action, whether it be up here in the most bullish area, down here, which is medium bullish, still bullish, or down here in the last line of resort for the bulls. But this last third area might be the one that is the strongest and giving us a little bit of that quote unquote discount rather than paying a premium up over 400 or even in the 385s, for example. So some areas there that I am watching on gold. All right, let's go right along here and come into the silver ETF, one that I'm a little bit more interested. Both markets now have hit new all-time highs. So, but silver I do still feel like has a little bit more catch up overall. It doesn't get as much media attention, so to speak, and it has a lot wider ATR than gold, right? You can see here up almost 4%, 3.8% today alone in holiday trading, which is very, very interesting. But right now, Santa Claus is filling everybody's sacks with silver. So I did post this on my chart here. I did post this chart on my TradingView, from TradingView, excuse me, on my Twitter, and these are two areas that I am definitely looking at for potential ads, or where I would feel a little bit comfortable getting into a new position. And we can see here now, we were talking earlier about that overextension. You can see here 84.88, the new highest high. And look at the 20 period on the daily down at 56.30, we'll call it. So huge extension there from the moving averages. In my opinion, this has to cool off. We see CNN post talking about it today on their broadcast. Tells me we're probably going to see the pullback. And silver, I would be a lot less shocked to see a bigger pullback. It has a wider ATR, and it having an 8% down day really would not shock me at all, or a 4% down day. That's just the way silver is. It is the Widowmaker's metal, the NQ of the metals, and so it just has a way wider range. So you really have to be careful there. Have to point out the $60 mark is the daily 9. So would I be interested in buying around 60 plus that psychological level? Yeah, maybe. I'd feel a lot more careful. I'd feel a lot more confident seeing some sideways action, and potentially we need these moving averages here to kind of flatten out, run a little bit sideways, let price catch up with them, and then we see that pull in, and then potentially from there we get that little bit sideways action, and then we get that new springboard up higher. So that is one scenario. But leaving the moving averages out of it, structurally speaking, down at 55, all the way down to 53.5, we'll call it, really where I would be a little bit more interested, or at least I would feel that would be a little bit more safe entry overall on silver. You may say to yourself, well, it's never going to come down there. We'll never get that entry. But again, with the volatility in silver overall, I really would not be surprised, like I said, to see a deeper pull in. Now you got to watch these gaps. Of course, the gap could fill right here and then just bounce off this last higher high, sure, and we could come down all the way to 58.50. We'll just call it another structural area that could be interesting, but I would watch closely, watch those moving averages, let them catch up, look for some of that sideways potential reaccumulation for the next move. And I really would not be too hot to trot to jump in on the first dip overall. I mean, even from 61 to 58, if I was to make this a zone, pretty wide zone for for just strictly buying. Again, you could use the tranche method and buy in sections overall, you would be wrong under that 58 basically, or 58.50 for a little bit more conservative. But let's see, we could pull into this area, run sideways, and then, like I said, from there make that move up higher. I personally, I'm not in love with this area completely. I feel much more comfortable seeing a retracement into here and then looking for the long. Now, of course, it's not going to be a straight path like that. We could come into there, reject, come up, come break a new higher high. I'm just making this up, but there's a potential path for a new establishment of a uptrend after a nice pullback. Either way, I wanted to make a quick video for everyone. Now, I'm sure if you're in the financial social media space, you're seeing everybody talk about it. So I just wanted to point out a couple of levels that I am looking at for potential adds into my current position or a new position overall. So that's all I've got. Happy holidays to each and every single one of you. I hope you get to spend time with family and friends. And of course, the market is great, but now we get a time to sit back, reflect, and really appreciate why we put ourselves through this in the first place. So, love you all. Take care. I hope this helps, and have a happy holidays.